Good morning, everyone. This is Joe from New York Trading Room. Today is November 10, 2021. I did one trade early. We did 296. We took short from this area and we cover here. Now I went long and let's watch it.
Is below our medium-term 2% target. So that means that that still an amount of monetary policy accommodation is needed.
Well, shares of DoorDash surging in extended trade. The U.S. food delivery company saying it would buy Finnish rival Volt Enterprises in an $8.1 billion all-stock deal as it looks to expand its footprint in Europe and boost growth. It would be one of the biggest deals in the space following Just Eat's takeover of Grubhub and Uber's deal with Postmates. Now, the news came as DoorDash also announced better than expected quarterly revenue, but its net loss did widen. Well, CNBC Pro Talks begin in just 30 minutes from now. Our very own Tanvir Gill will be talking to the CEO of Aquamarine Capital, Guy Spear, about his top stocks picks. And you can watch that interview live on CNBC Pro. Do subscribe if you haven't already done so. This afternoon, that begins at 2:30 p.m. Singapore, Hong Kong time. That does wrap up this edition of Capital Connection. I am Hadley Gamble in Abu Dhabi.
And I'm Matthew Taylor in Singapore. Stick around. Squawk Box Europe coming up for you after the break. We'll see you back here tomorrow.
Than would have been anticipated.
Good morning, everybody. Rivian prices its IPO above the range, valuing the EV maker upwards of $66 billion ahead of its NASDAQ debut. And it's another losing day for Tesla. Elon Musk loses $50 billion in 2 days as Tesla stock drops another 12% amid the continued fallout from his Twitter poll on selling a 10% stake.
Plus, it's a busy day for earnings in Europe with Siemens Energy, Allianz, Adidas, Ahold Delhaize and Infineon all reporting. Hear from them all here on Squawkbox.
This spike in energy prices, but we do see those as dissipating in the course of next year. So we are relatively optimistic on the economic outlook.
Right, okay, we are looking for numbers from the likes of Infineon, from the likes of Adidas. I don't believe either of those have hit the wires as of yet. In fact, they haven't. What we have had is numbers out from the likes of Skanska as well, another company which is struggling, of course, with the increase in raw materials and indeed finding the correct workers out there. But coming up on the show, Allianz hails strong performance across its businesses after a jump in revenue and core profits. We'll speak to the CFO, Giulio Terzariol, after the break. But you know what I'm going to do? I'm going to rip up the rule book and just very, very briefly tell you what the Infineon numbers are very quickly. Fourth quarter revenue came in at 3.007 billion euros as opposed to expectations of 2.94. The gross margin up at 41.2, very, very strong compared with the estimate of 39.5. We'll do some more work on Infineon after a very short break.
Okay guys, so we did the 3 trade. Last one was 194, second one 221 and 296. Now I just wanna share with you pound dollar. One bank he took short. Let me find the name of the bank for you. Here you go. This bank in Finland, the headquarters in Finland, he's number 4 in Interbank. He took short on pound dollar, and he's up 6 pip now. His target 127.50. So he's talking about 700 pips down, and of course he have like 300 pips. So he's risking 300 pips to get 700 pips. So this is his position. He's already in profit right now. The second one, also dollar yen. It looks like we have a big option around 113.05. So I don't expect dollar yen is gonna go above 113 or 113.05. So every time the market will go near this price, I guess we have a big option in this area. So keep your eye on it, because if we starting trading above this two line, the bank he will lose $1 billion, and I don't think the bank is gonna let it go above this price. So keep your eyes
Welcome back to Scorebox.
on this level.
Price pressures reverberating around the world as the US and China report record-breaking inflation levels. But the Fed's James Bullard tells CNBC the central bank is positioned to hike rates next year if needed.
The committee has tilted hawkish here. This is a sooner.
So if you're planning to go short around this level, where is your target? It's gonna be 1250. 1250 is under here. 1250. And 1230. So we have this range. I guess the range is gonna be between these two lines here, this line here and this line here. So you can go up and down between this line for today, because we have a big option, 963 million and 470 million, and we have here 1.1 billion. So this is the price I'm talking about, 1230, 1230 and 1250 and 1305, 1300. Okay, so this is the two trade I just saw from the big boys. Now, yeah, you can go. A lot of traders, they're gonna short here and they're gonna buy here. So just keep your eye on those price. So we have 75, we have 1250, and we have 1230. And 1301 and 1305. So I guess you can see they defend the 1275 right here in early Asia. So it can be the range between these two lines here. If we break this, we're going to this line, so watch out. If this price hold, you can trade between these two lines all day. Okay, so this is for dollar yen, pound dollar, and if I see anything else, I will let you know in the chat room. Let's go back again to gold trade.
So it's more than 750 kilometers, and from a convenience perspective, for the members of my team who had the fun time doing this, I can say it wasn't really any big hassle in any way or form. And of course, Porsche Taycan is really at the ultimate high level of electric vehicles available today, but it has certain innovations in it, like a 800-volt system, which helps also show that it's, you know, the charging times can be reduced significantly by driving the technological development.
Well, Theodore, it's always good to keep in touch and find out what the latest news is from ABB on these superchargers. So thank you so much for joining us. And I'm glad your team managed to negotiate the M6, because it can be a nightmare at times. But thank you so much. Theodore Swedgemark, the Chief Sustainability Officer and member of the board at ABB. Okay, we need to just move you along here and squeeze in a quick break. Something else I need to tell you about. Just ahead, Marks & Spencer is posting its quarterly numbers. We'll get an update on how the clothing and food business is going.
Okay, good morning, GH. I don't know if you saw those three trade early. We did 296, 221, and 194 half hour ago, and we are in another two trade right now. And also we talk about dollar yen. We have big option today between $1 billion around 113.05, 113.01. So I guess the price is gonna hold around this area, and we have big option right here. So I'm expecting for dollar yen the price is gonna be ranging between those two lines, so you can go long and short. If we break this line, we have another option, big option here. So I'm referring to this screenshot. You can see $1 billion. If the price start trading above 103, 113.05, the bank he will lose $1 billion. I don't think the bank is gonna lose 1 point. It's gonna defend this two line today. So it is very good area to trade between this line and this line. And we have 470 million, around 50 and 75. You can see 75 has been holding in Asia session so far. We never break under 75. But if we break 75, we were going to 1250, which is another option for about 963 million, 50 and 30 in this area. So so you can trade between those lines if you want. And also I talked about pound dollar. One big bank, it's number 4 in interbank. He took short in pound dollar. His target 700 pips. He went short around 35.58. His target 27.50, which is about 700 pip, and he's gonna risk only 300 pips, and he's already profit in this trade because he's talking about Brexit exit risk, and the Bank of England is not clear about his policy, so he think it's a good idea to short pound dollar. So I just recap everything, and this is what we have right now.
Ahold Delhaize hikes its full-year guidance as the Dutch grocery group posts a 4.6% jump in third quarter net sales at 18.5 billion euros. The CFO, Natalie Knight, will join us this hour. And Allianz tops third quarter profit expectations as the German insurer says it's well positioned to capitalize from opportunities amid the global recovery. Speaking to CNBC just a few minutes ago, Allianz CFO Giulio Terziro weighed in on inflation in the Eurozone.
For the time being, we don't see a widespread inflation increase. Clearly, the answer is going to be different country by country or line of business by line of business, but as of now, I can tell you we are not seeing inflation increase impacting our result.
Plus, Siemens Energy fourth quarter orders jumped more than 30%, and the company proposes a 10-cent dividend as it wraps up the first full business year since spinning off from Siemens. CEO Christian Bruch, though, warns on this show that supply chain worries are here to stay.
Managing the supply chain will be something which will be with us for long. It will be really a core competence of companies like us, and really making sure that you can manage these scarcities and issues on the supply chain.
So a big focus on inflation inevitably through the programme this morning here, and you may recall that a week or so back, Bild, the best-selling German newspaper, had a front-page attack on Christine Lagarde, arguing that the ECB is asleep at the wheel when it comes to tackling these inflation risks. Well, no doubt there'll be further enraged this morning as they look at the October final CPI print, plus 4.5% year on year, according to the Stats Office, 0.5% month on month. The final HICP coming in at plus 4.6% year on year, plus 0.5% month on month, Steve.
Actually, there's a great website, destatis.de, which is where the Germans put this stuff out. I'm sure it's all transitory, because that's what I keep getting told by central bankers, but they put out the data already on this website. I've just got a little bit more information on this as well. What do you think the consumer prices and energy component were? I mean, some of these indexes are absolutely huge. So, for instance, in October, energy, household energy and fuels were up 18.6%. Household energy, electricity, gas and other fuels were up 10.8%. And now I know we've got an energy crisis going on in Europe as well, but these are still stratospheric figures as well, including heating oil and fuels. We've got a 3.1% figure, but more moderate as well. Heating oil and fuels on their own up 43.9%. But if you want to have a look at, dig into the details on the German inflation story, go to the destatis.de website. You can do it while you're watching the show. You don't have to do it separately. Okay, let me just tell you that Marks and Spencers think they've got something going on here in terms of the recovery. And as such, there's some quite interesting data coming out from Marks and Spencers as well, which are the shares, well, they're pretty much double their lows of the last 52 weeks. A year ago, they were trading 97 pence per share. Now they're trading at 196p per share. Well, let me just go through the numbers for you as well. So, first half pre-tax profit up to £187.3 million versus 158.8 a year ago. Profit before tax and adjustments, 269. Let me just try and get into the weeds a little bit for you here. Food sales up 10.4%, excluding hospitality and franchise. They were up 16.9%. C&H, which is clothing and homewares, I believe, down 1%, but full price sales up 17.3%, so less discounting. That's very interesting. Online sales growth in C&H, again, clothing and home, up 60.8, now 34% of the entire total. Store sales, again, continue to be under pressure, down 17.6% as well. This is what they say. They say the hard yards of driving long-term change are beginning to be borne out in our performance as well. So Marks and Spencer's, which has had a decent sized rally, although I don't want to get too excited because they were trading pretty much double where they are now. I mentioned to you they doubled from their lows of last year. Well, as of, I don't know, May 2017, they were double the level they're trading now. So a long way to go. Okay, more non-inflationary stories for you. Producer prices rose 8.6% in the US across October. 8.6%. Hitting their highest annual levels in 11 years. On a monthly basis, wholesale prices rose 0.6%. That is in line with expectations. Surge in prices for goods such as gasoline and autos drove the strong reading. Strong PPI readings expected today. Well, beg pardon, in CPI expected today as well. The Reuters forecasting consumer price inflation to hit 4.3%. Now, I have asked the team to be a little bit more accurate on this one as well, so they haven't changed the read, so I'm going to do it myself. That's 4.3% is a core level, okay? The headline figure, which includes food and fuel, which people seem to be ignoring these days because no one uses food and fuel, apparently, could well be a very high 5 handle. Now, these figures are well above the Fed's targets on inflation of 2% and set to ratchet up the debate around a potential rate hike. Juliana spoke to the St. Louis Fed Reserve President James Bullard on the sidelines of the UBS European Conference and asked him whether institutions are equipped to deal with the new paradigm of higher inflation.
I doubt it. We haven't had much inflation in the U.S. over the last decade, and even before that, we haven't had inflation like we're seeing today. Core PCE inflation, which is the favorite inflation measure of the Open Market Committee, is 3.6% right now. That's the highest level. That's less food and energy. So you're already throwing out food and energy components, and you're smoothing. It's 3.6%. That's the highest it's been in 30 years. So I just don't think we have people in the economy that are used to this level of inflation.
With this level of inflation, are central banks being complacent?
Well, I hope not. So we have a two-pronged strategy. One is that we do think some of the increase in inflation will turn out to be moderate as we get into 2022 here. So we're waiting to see more data to see if that happens. And then on the other side, I think we're hedging our bets to some degree and preparing to be somewhat more aggressive with monetary policy to keep inflation under control in case it does not moderate as we go into 2022. And so we've got, I think, both elements of that going on. The committee did decide to taper asset purchases at our last meeting, and so we'll be running down our pace of asset purchases, and we'll finish up in the first half of next year.
Juliana also spoke to Jason Furman, who is a professor of practice at Harvard and the former chair of President Obama's Council of Economic Advisors. She asked him if inflationary pressures are set to stick around longer than anticipated.
The Fed has been a little bit behind the curve, and they're going to be tested next year. If they're right and inflation comes down to the 2.3% they had as the median forecast in the last FOMC, then they're fine. If inflation's more like 3%, which I think is more plausible, then they'll need to shift off their game plan, raise rates faster than they're currently telegraphing that they're going to raise rates. And so the question to me is they don't need to do anything beyond what they've done right this moment.
Mr. Furman there. Well, Chinese factory gate inflation has hit a 26-year high amid energy shortages and surging prices for raw materials. Consumer inflation also topping forecasts with a rise of 1.5% on the year. That is the first acceleration in 4 months. Sam has more on these two inflation reports.
China's factory gate prices rose to the highest rate since 1995 last month, signalling mounting upstream price pressure on producers as commodity prices have remained high. Now, this is particularly the case for coal, which hit a record high in the middle of the month. The coal mining sector saw prices shoot up over 100% as the government has been trying to address the energy crunch. Now, those prices have started to cool on a government intervention campaign. Some economists say the PPI could ease on these falling coal prices, but it is expected to stay elevated. Consumer prices, on the other hand, also picked up because of a smaller fall in food prices. Pork, which significantly influences the headlines, still dragged, falling 44%, but vegetable prices jumped because of bad weather and COVID restrictions. Non-food prices, meanwhile, were up 2.4% because of high fuel prices. Economists say another factor in the rising CPI was electricity prices, which jumped after government reforms to allow them to rise as much as 20% for households and SMEs. They say some companies also started to raise their retail prices. So we are starting to see signs of some pass-through, but so far the sticker shock is limited. 1.5% is still fairly muted as domestic demand remains soft, but economists say there is an expectation we could see those consumer prices start to rise further early next year. In Singapore, I'm Sam Vardis. Back to you.
Yeah, it's a huge question Sam's asking. Will these producer prices go through into consumer prices? And will this flood of labour coming back to the market I keep reading about, will it actually happen? I think many of us have our doubts about what's happened in the labour market will create a huge participation rate surge, but we can wait and see, can't we? US markets abated yesterday for the first time in around about 8 or 9 sessions as well, but my goodness me, we've come up a long, long way. S&P for the year to date is already up 25%. Let's just remind you, though, that CPI is due today. Again, we're looking at a 5 handle on that. 4.3 is the core figure that a lot of the analysts and economists out there are looking for. But again, I'm sure they'll just give us the transient answer at the end of this one as well. Nothing's permanent, is it? Apart from if you listen to all the CEOs on this channel. Let's move on and take a look at the Asian indices. Again, the Shanghai Composites actually rallied significantly off its lows, now trading 34.93 after that high PPI print as well. The Nikkei down 0.6%. European futures look like this. A lot of corporates reporting flat as a pancake. We were pretty flat yesterday. I want to get to this break quickly because one of our best guests from the corporate world is coming up after the break. Adidas shares apparently under pressure in pre-trade after the sports giant trimmed its full-year outlook. CEO Kasper Rorsted will join us next.
So we took another 194 and 296 and the third trade -8. So this is all. Every time the price touches this line, it jump very quickly. Like I miss couple time to cover right here. So, but I'm happy for today. It's almost $1,000. Yesterday we did 947. The day before 894. The day before 517. The day before 913. 1,000. So yeah, between 500 to 1,000 every day. 700, 1,400. It was good price action today actually on gold. So now let's watch dollar yen now. Let's see if the price is gonna hold. So I'm planning to trade dollar yen around this level and this level. Pound dollar, like we discussed early, we're looking for 3,700 pips down. Okay, so that's it for today, guys. Have a great day, everyone. Talk to you later.